Hey everybody, welcome back. So today I'm going to be taking a look at a strategy that is going to make you just a lot of money if you are right about the stock moving a certain way. And so, we're going to be talking about a strategy that can earn you a lot more than the amount of money that you might lose. Okay, and if you don't know what the strategy is, it is the long butterfly strategy and the iron condor. Okay, these are great option strategies for trading on stocks that move sideways. And so you're probably asking, well, what stocks do you have in mind that trade sideways? Now, this is just an example, but I just want to show you a stock that I'm looking at myself, and it is the stock ticker SAFM, so Sanderson Farms. As much as I like chicken, I'm not really trading for the chicken. So this is not a company that I'm invested in long term. Okay, so I don't hold any shares. It's simply and solely a stock that I would like to trade options on, and specifically the iron condor and the butterfly strategy, because there's such a high percentage chance that I'm going to be right on the call and I'm going to make a lot more money. And so, just taking a look at the last, ever since September, so last couple months, this stock has really been trading around 100, like a high of 190 or 191, and then up to just basically around the 188, like the 100, like the high upper 180s up to like the really low 190s. Okay, so between like 187, 188 to 191. Okay, so that's great because it's really trading between a range of just a few percentage points, and I'm just gonna show you how you can sort of take advantage of that and make a really good profit. So if we go into Robinhood, I'm going to show you what that looks like on using Robinhood. So first, you would go ahead and set an expiration date. Okay, and you want to set an expiration date that is as near term as possible, because really time is not in your favor. So you want this to expire as quickly as possible, so that there's not as much time for things to change. Okay, so taking a look for the expiration dates on Sanderson Farms. Okay, so it is a monthly option for the stock, so I would just go to December 17th. And so the first thing you would do is you would open up this position by selling a call. Okay, you want to sell a call sort of close to the money. Okay, so I'm going to sell the call right above the share price at 190. Okay, so and then the next step you would buy the call immediately above that strike price. Okay, so I'll go ahead and buy the call at 195, and you would buy the call one strike right below the share price that you sold the call on. Okay, so this would be 185. Okay, so as you can see, if Sanderson Farms continues to go up, you would make a profit. But your max loss, if it goes down, is $378. So we're going to change that a little bit, and we're going to go to custom, and we're going to set a custom ratio to sell two calls. Okay, so we're going to sell two calls instead of one, and now you see a little triangle where, as you can see, if the stock goes down 1.48%, you would still essentially break even. And if it moves anywhere between negative 1.48% and 3%, so allows more room to go up, then you wouldn't be making a profit. Your max profit, if it goes up just a little bit, is $400, and your max loss is only $100. So to me, that's a really great bet, because you're essentially betting that the stock won't move, a couple percentage points, and that's been true for the last couple months, right? If you take a look at the stock again, this stock has really been trading really sideways in the last couple months. If you had done this strategy last couple months, you would be making pretty good profits. Now, I want to show you what the iron condor looks like. So we're going to exit out these trades. The iron condor is a little more complicated, but nonetheless, it's still a great strategy. So you would open up the position by first doing a put credit spread. So you buy a put and you'll sell a put at a higher strike price. Okay, and then you would go into the call side of things, and you would first buy a call, and then you would sell the call at the strike price underneath it. Okay, so this is a slightly safer strategy, but your profit is less and your downside is a little more. So if you take a look at this, the stock can go down 3% and it can go up 2%, and you'll still be making a profit of $285. But there's more room, right? So even if it moves down 2%, if it goes up 0.64%, you would be making the maximum profit. But your max loss, on the other hand, if it goes up a little too much or goes down a little too much, is a little more. Okay, and of course you can adjust this. If you're more bullish on it, then you would just sell your spread for higher and you sell your call spread for higher as well. Okay, so that's basically how the Iron Condor and the butterfly spread works. They're great options if you want to maximize your profit and make a lot of money off of just a little bit of collateral. Again, Sanderson Farms is just one stock ticker that I'm personally taking a look at myself. And so, let me know in the comments below if you have any stocks that you know have been trading really sideways and you really don't think is going to move anywhere, and this will be a great option for Iron Condors or the butterfly spread. And then one more thing is I want to show you what the spread would look like on OptionStrat. So you would go to optionstrat.com, you would build, I'm just going to show you the long call butterfly because that's essentially the first option we opened. So if you recall, we sold 2 call options at 190 and we bought the 185 and the 195. So as you can see, your profit would be within this range, right? If the stock goes up to 192, then you would still be making a pretty good profit, right? Once it goes up above that, your profit would really start to decrease, okay? And if the stock goes down for some reason, you have a little bit of room for that as well. If it goes down to 185, you'll still be making a profit. And if it stays within the 190 range, the 189 and 191 range, you would be maximizing your profit and you'd be making really good money on this spread. Okay, so that's basically how OptionStrat works and what it looks like. Again, if you like this kind of content, if you want me to make more content similar to this, just make sure you smash that like button. Comment below if you have any questions. I'd be more than happy to help. And just make sure you subscribe if you want more similar content. All right, until next time, guys, stay safe, happy investing, and I will see you next time.